Good day and assalamualaikum. I am Hayanisa Hassan and I am the one who is assigned to discuss the accounting methods. Let us first talk about the Revenue Regulations 298. It provides that the method of accounting regularly employed by the taxpayer in keeping his books is to be followed with respect to the time as of which item of gross income and deductions are to be accounted. Each taxpayer is required by law to make a return of his true income. However, due to peculiarity of each type of businesses, no uniform method of accounting can be prescribed for all taxpayers. Thus, the tax code contemplates that each taxpayer shall adopt accounting method that in his judgment is the best suited to his purpose. Any approved standard method of accounting which reflects taxpayers' income may be adopted. The following are the essentials of an acceptable accounting method. First, there should be distinction between revenue and capital expenditures. Second, expenses to restore property or prolong its useful life should be added to the property account or charged against depreciation. And lastly, in all cases in which production, purchase or sale of merchandise is an income-producing factor, inventories at the beginning and at the end of the accounting period should be considered. Let us now move on to Commissioner of Internal Revenue to determine accounting method. The computation of taxable income shall be made in accordance with such method of accounting as in the opinion of the Commissioner clearly reflects the income in the following instances. First, if no method of accounting has been so employed and if the method of accounting employed does not clearly reflect the income. Let us now talk about the kinds or methods of accounting. First is cash method. Second is accrual method. Third is crop basis. Fourth is installment method. And the last one is percentage of completion. So there are only three methods or kinds of accounting that were discussed in our book. So the first method is the cash method. Under the cash method, income is reported in the year it is collected actually or constructively. Likewise, expenses are deducted from the gross income in the year it is paid. So the second one is accrual method. Under this method of accounting, income is reported in the year in which it is earned and expenses are deducted from the gross income in the year in which expenses were incurred. This method of accounting applies to a farmer who is engaged in producing crops which take more than a year from the time of planting to the time of gathering or disposing. The last one is percentage of completion. This method of accounting is prescribed for long-term contracts. Long-term contracts refer to building, installation, or construction contracts covering a period of more than 1 year.